This is Eric Mwade for the week of September 23rd. This is pre-market action about 2 hours and a half before the market opened. Dow called up about 50 points. S&P 500 called up about 1.69. Nasdaq called up about 7. Overnight, we see that Asia was pretty much mixed, slightly to the downside, but we see that China was up about 1.33% there, so that's the biggest mover overnight. As far as Europe was concerned, we see that we remain unchanged as we go into the new trading week. Let's take a look at commodities here. We see that gold is down about 6 points there, and crude oil is slightly to the upside. So, I'd say the market is just opening where it closed at the end of last week. So let's take a look at the weekly charts here to see what we might have in store for us this week. If we take a look at the Nasdaq here, we see that it is the market that has had the best performance in terms of staying above the breakout level. As you can see right there, the breakout level was 36.89. So we've had 2 weeks of staying above this breakout level. That's a very strong market. If it can hold that, then this market recaptures or eventually moves above these highs here, and the Friday action is going to be negated. So let's watch how the market responds to this level here in terms of holding above that. Having 2 weeks or having a follow-through week shows that the market has strength, even though sometimes we tend to think that it is weakening, but the Nasdaq is showing that this market could have potential to move higher. Now, unlike the Nasdaq, if you take a look at the Dow weekly, you see that the Dow failed to break out. The breakout level was 15,658, and it failed to hold above that breakout with Friday's move. So that is an issue there. Somebody can be concerned with the fact that the market did not break out. So we need to see whether the market does eventually break out above that level. If not, then this was a trap for now. The Dow daily, the same thing. You see that the breakout level here failed, had 1 day of stay above that breakout level, and subsequently had 2 down days. So that is a failed breakout for now. We'll see what happens short term, but that is sometimes where you begin to see a serious pullback. That failed breakout can be the beginning of something that could push this market lower. Take a look at the Dow from a daily or from an hourly standpoint to see that that was where the market had stayed above the previous hourly breakout, going back to that closing high there. So we stayed above that just for about couple of hours, and then subsequently we see this sharp decline. We also moved back below the previous breakpoint, and by the previous breakpoint I mean this breakpoint here, which corresponds to this blue line here. So once we broke down here, came back, slashed above that line, but we've since gone below that. So all this area could have been a trap, because we are back below the previous breakpoint here, or trend breakpoint there. So we are back below that level. So I'm going to repeat that maybe this was a trap, and we'll see what happens. The way we know it wasn't a trap is if the market can recapture back above this breakpoint and back above to new highs on the weekly and on the daily. The Dow Transports, the level to watch this week is to see whether they can hold above 6551.49. So that is the highest weekly closing high. We closed above that, so we see whether we can hold above that and have a follow-through. If we can have a follow-through, that could also suggest that the Dow Jones itself also breaks out. But let's see whether it can hold. Anything back below that level is going to be confirming that this market is getting tired. The Dow Transports daily, I spoke about this on my Friday video or weekend analysis video. There's some highs here. If you take the closing highs there, draw a straight line. We stopped right there, which is where the top lines of this channel. So that could be the beginning of a push lower. We'll see what happens. S&P 500 weekly. Now the S&P 500 held just a few pennies. It held above 1709.67. It closed exactly at 1709. Oops, that doesn't help. 1709.91. So about 20, 24 cents above that level. So we'll see whether it can hold above that. If it can hold and follow through, that's a very strong indication of direction. If it fails to hold 1709, then that's confirmation that it too has failed to hold current levels and could be pushing lower. S&P 500 daily. Obviously, we can see that the top lines take the daily closing high there, daily closing high there, draw a straight line. Like the transports, we stopped exactly on the top line of that channel. We'll see whether the next direction is. The previous daily closing high was also at 1709.67. So we'll see whether it can hold above that. If not, pushes lower, that's a failed breakout. If it can continue pushing higher, then that's still holding above that level. So the S&P 500 has not failed on its breakout. The breakout still continues in effect. We'll see which direction it takes throughout the course of this week. Let's take a look at the IYR daily. Now they had a nice, the IYR or real estate had a nice bounce, but it seems like it stalled exactly at the 200-day moving average. So ever since we broke below the 200-day moving average here, we've not closed above it. So if you want to go along this sector of the market, wait for it to break out above 66.98, which is this daily closing high. If it breaks out above that level down the road, that could be a nice entry point and could also suggest that it has recaptured the 200-day moving average. Right now, it seems to me like the 200-day moving average is acting as some type of a roof here. And now that it's trading also between the 50-day moving average and between the 200-day moving average, it's very hard to call which direction it wants to take. So we might have resistance on the 200-day, support on the 50. So very tough market to read. But if you want to get long this one down the road, wait for it to move above 66.98. Let's take a look at commodities here as a group, and we're going to take a look at the CRB. One thing I want to note is watch this level here, 293.34. If it can break out above that level down the road, that's going to be an indication of the fact that we need to be long commodities like the metals, the silvers, and the gold. So 293.34 on the CRB. Right now, it looks to me like it's back below the 10-week moving average, back below the 33-week moving average. You know, given that trend, also a break of this trend here, I still believe that this could be pushing lower for now. Also notice that the RSI shows that this red line, if you take the highs there, draw a straight line. We stalled here exactly with a double top on the weekly RSI. Also, this area has been an area of resistance on the RSI, and also we stalled there. So, you know, for now, it looks to me like gold and silver could be also pushing lower, but I'm watching to see whether they break recent weekly highs. If they break out on the weekly above this level here, then maybe they're primed to move higher. For now, I see resistance as far as the metals are concerned. So enjoy the trading week. This is Eric Mwathe. Good luck. Talk to you guys later. I am out. Woo!